Hello, welcome to the European Open briefing for Monday, May the 14th. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be taking a look at the latest developments in the currency markets today. The US dollar is consolidating as US Treasury yields pull back from above 3%. We do have a risk-on sentiment this morning, though, not just on the fact that the US rates won't have to go up as faster than currently being projected, but also there is some optimism surrounding the trade tensions with the US and China on signs that the US is softening its stance. The euro is continuing its rebound, but there is caution as we've got political uncertainty regarding the situation in Italy. The Australian dollar is also extending its gains this morning, but the New Zealand dollar's rebound has faltered. The Canadian dollar is weaker following Friday's disappointing jobs data and amid anxiety on the looming NAFTA deadline. So let's start now with the US dollar. We can see both dollar index and dollar yen retreating from those multi-month highs we saw the middle of last week. Dollar index currently trading around 92.50 and dollar yen is slightly firmer this morning, approaching the 109.50 level. So we're seeing US Treasury yields pull back following last week's somewhat disappointing or somewhat softer than expected CPI data, and the prior week we saw in the US jobs report wage growth also came in below expectations. All of that points to the fact that the Fed will continue to raise rates only gradually and won't need to follow a steeper rate path. Tomorrow, China will send its top economic advisor to the US to hold talks on trade. The US President Donald Trump said that he wants to see the ban on Chinese companies ZTE being relaxed following the US ban on US suppliers selling their products to the Chinese company. So that ban has crippled the China ZTE, and that US President Trump wants to perhaps keep China on its side ahead of those talks with the North Korean leader on June the 12th. So overall, that is positive for the markets, and we're seeing mostly positive Asian stocks this morning and in Europe as well, the European Open. And last week we saw strong gains for the major US indices, where they enjoyed the strongest week since March. Let's now turn to European currencies. We can see the euro heading upwards, recovering from those 4.5 months lows. 1.1821 last week is currently trading around 1.1970. We had some comments by the Bank of France Governor Francois Villeroy, who said that the ECB will probably need to update its forward guidance as it approaches the end of its asset purchase program to signal to the markets how soon interest rates would need to go up after that. But there is some uncertainty, as in Italy we're seeing two anti-establishment parties which won the biggest share in the elections in early March, the Five Star Movement and the League, coming close to forming a coalition that could lead Italy on a collision course with the EU, as both parties oppose many aspects of EU policy. But for now, the euro is enjoying the weaker dollar to recover from those lows. If you look at sterling, though, it's looking very much neutral at the moment. Although it did recover from those lows from last Thursday following the dovish Bank of England policy meeting, it hasn't been able to take advantage of the weaker dollar. So the interest rate hikes expectations have receded for this year. There had been, up until the Bank of England multi-policy meeting, there was a chance that we could perhaps see 2 rate hikes this year, but now that's looking at just 1 rate hike. And also there is Brexit uncertainty. The UK Prime Minister Theresa May is under pressure to decide on whether or not the UK will remain in a customs union with the EU once it leaves the bloc, or whether it will abandon the customs union altogether. So all of that is causing uncertainty uncertainty for the markets. Sterling is flat at the moment, around 1.3570. If we look at the Australian dollar, though, it's a similar picture to the euro, recovering sharply from last week's lows when it fell to an 11-month low, 0.7410. It's now recovered all the way up to 0.7550. Whether or not that recovery will hold and will continue will depend on Australian data this week. We've got the wage price index coming up on Wednesday and the employment report coming up on Thursday. If those disappoint, we can see the Aussie fall back again. If we look at the New Zealand dollar, it did recover a little bit after the RBNZ meeting, but overall the dovish RBNZ stance, which took markets by surprise, is weighing on the Kiwi. We can see, although it has recovered from just above the 0.69 level, it hasn't really managed to break above the 0.70 level, as the RBNZ says that interest rates in New Zealand will remain on hold for a considerable period of time. The Canadian dollar is also struggling somewhat. On Friday, we had disappointing employment report. We saw a surprise drop in the new jobs being created in Canada in April. We've got inflation and retail sales numbers coming up this Friday. If they are more positive, we could see the loonie extending its gains. We can see that recovery for the loonie last week when it rose from 1.30 to around 1.27. At the moment, it's weaker, around 1.2780. But trade will also be in focus this week. The NAFTA negotiators failed to break the impasse over the highly sensitive auto sector, and we've got that deadline of May the 17th approaching. If they fail to reach some sort of a preliminary agreement by May 17, that could put the loonie under further pressure. And a quick look at oil prices. On Friday, we had the US oil rig count for last week, which showed the number of active rigs rising to the highest since March 2015. We also saw US crude output rising further last week, so all of that has been negative for oil prices. Plus, we're seeing strong opposition by European and Asian countries with regards to the planned sanctions by the US on Iran. So this means that even if those sanctions are imposed, it will mean a weaker compliance by other nations, and therefore the production cuts by Iran or oil exports by Iran, the cut in exports won't be as much as had been when the sanctions were last imposed a couple of years ago. So we're seeing oil prices retreat. WTI currently slightly down on day at around $70 a barrel. It's going to be fairly quiet for the rest of the day, but we do have a number of speakers by the ECB coming up today. Plus, we're going to have the monthly OPEC report at 11:20 GMT and a speech by RBA Assistant Governor at 23:10 GMT. That's it from me. Thank you very much for watching and have a great day.